Money Day, guys and girls. I hope you lot are blessed. The first thing I want to say is Eid Mubarak to all of my brothers and sisters who have celebrated this holy month. It has been a blessing, of course, to endure this time, to reflect upon our highs and our lows, but also to give back and to be grateful for what we have. Now, I've also been ill for quite some time, so sorry I haven't done a video in quite a while, but I am now officially back. Providing you guys with content, and what I want to do first things first is just break down how the trades have been throughout this week inside of my Telegram. If you're not inside the Telegram, then please rest assured as you're watching this video, all you simply need to do is go down into the description box, click on the link, get access to my free Telegram, and inside of there you'll be able to message me directly so that you can get access to these trades too. Now, of course, with no further ado, this week has been very interesting. We've seen Bitcoin over the past couple of weeks continue to make an all-time high. We've seen gold continue to make an all-time high. It is absolutely incredible what's happening right now in the markets. So I want to take this time to give you guys and break down exactly what trades we took this week, how they played out, but also to let you guys know what I'm looking for throughout the week to come. So, as always, make sure you smash the like button, subscribe, you know the vibes, it's lit side. Let's get into this. Okay, so the first thing we want to do is we want to check the economic calendar. So we want to see how the markets have played out throughout this week. Now, throughout this week, guys, we have had some really big news taking place. We've had the Kiwi interest rate, which remained the same. We've had the Bank of Canada interest rate, as well as the ECB, European Central Bank interest rate, remain the same. Now, a lot of these central bankers are talking about reducing interest rate. So because of that, there is a parallel reaction to what we're seeing within the stock market, which is the fact that if rates are going to go lower, people right now are trying to put their money into high rate returning investments. That, of course, would be the stock market as well as commodities markets too. So as we have a look further into what took place this week, we have the CPI, the core consumer price index, which is inflation. We can see here that the CPI was actually better than expected, which actually was a catalyst for the dollar increasing with its strength. And then we can see here on Thursday, we had the initial jobless claims, which is basically less people claiming jobless. Less people who were claiming joblessly. And then, of course, throughout the rest of the week, we had the GDP for the pound and the CPI for the German economy. Now, the German economy is really important, guys. That remained the same. The German economy is the largest economy inside the euro. So that means you should always pay attention to what's happening in Germany, because if Germany's economy is going down, the euro is most likely going down too. Okay, so next week, what we have taken place, not that much news to be released, guys. We've got CPI for the euro, which is going to be interesting because we've already seen the CPI for the German euro, right? We've got the ECB CPI, we've got the pound CPI, we've got crude oil inventories, which take place every Wednesday, and jobless claims on Thursday. Now, right now, the oil market is most likely suspected to actually continue its bullish strength, even if we do get pullbacks, and that's simply because of the major disruptions we're seeing right now between the Middle East, Ukraine. There's a lot of conflict with war going on, which of course is going to affect the price of a lot of these assets. So I want to shift your attention to this article I found on the Wall Street Journal by Gold. And it says here, gold hits new record on central banks buying and safe haven demand. Gold has also gained as tensions in the Middle East and Ukraine boost its safe haven appeal. Now, it's very well known that when economies perform poorly, commodities do very well. And when economies are seen or perceived to be uncertain, investors always run to safe performing assets, which we also call a hedge against inflation. Now, there's so many factors as to why the commodities market, crypto, the stock market is rallying, and they all kind of coexist around the fact that the interest rate at the moment is high, but it's perceived to be something that will be reduced over the coming months. So until that happens, we of course will see investors scurry along to high-performing investments that will of course provide them with a good yield on their return, and that's the reason why we will see a continued strength of these assets continuing to flourish, and also a lot of manipulation. Okay, the key aspect to take away from this article was that central banks are buying gold. Okay, that means, guys, the buying power that these central banks have are the reason why we're seeing every time the market reopens after a shallow pullback, boom, all-time high, boom, all-time high, boom, all-time high. We are continuously getting all-time highs with gold, and that's because, of course, you've got the biggest guys in the game, the central banks buying gold. Okay, now I want to also take your attention down to it. It says here, strong purchasing by central banks and sustained demand from individual investors, particularly in China and India. Now, China and India are two of the largest economies in the world, so they continue to provide solid support for gold, attracting speculative investors and maintaining high prices. Now, the other article which I found really interesting to break down for you guys is another article reflecting why gold has been rallying, and it says here the rally is rooted in expectations that the economic growth will increase demand from the US and China. Now I'm going to break that down for you. The rally is rooted in expectations, meaning there is no concrete evidence yet, but the rally is going up because it's expected that the economic growth will increase demand, meaning, okay, that price is pushing up right now. Investors are getting into these assets right now because they believe that as the economies between US and China grow, the demand for gold will also grow with it. So essentially investors are getting in early, you could say, which would essentially be pushing the price higher as well. Now, also here it says a surge in prices for the raw materials that power manufacturing and transportation shows investors betting on a prolonged expansion and a potential rebound in inflation. Again, guys, okay, to break this down for you, a surge in prices for the raw materials. We're not just now talking about gold, we're talking about commodities as a whole, okay? Investors are getting involved in purchasing this because they believe, okay, which says here betting, they are betting on a prolonged expansion, meaning they are betting that down the line there is going to be an expansion for the demand of these assets. So essentially, guys, the market's moving based off of pure speculation, okay? Now, what's really interesting for me is that what I found with the crypto market is that it coexists with the stock market, more specifically the NASDAQ, which is tech-based, okay? And as the tech-based NASDAQ pushes higher, we usually get a coexistent push with Bitcoin. So I just want to break down to you guys what I saw here on this trade. If I go into the 4 hour, we can see here, if I go on the line graph, we can see that we had a new low down here, which actually showed us that we were now bearish, okay, after we had a new all-time high. Some would call it an equal high, okay? But price, of course, made a new low and then it pushed up. So once price makes a new low, this now gives us a valuable area to provide ourselves with a Fibonacci swing. So we had this low, we had this high to low, and we wanted to see a pullback. Now we got a couple of pullbacks. We had one pullback here on the 62%, price pushed down, but also when I go into the candle charts, you'll see price did also wick that 79% area as well. So it's not just like, you know, price came to 62 and it came down lower. No, price was a bit fiddly here, okay? It was up, it was down, it wicked the area, it looked like it was going to come down lower and take out the low, but all it done was create an equal low. That equal low that it created, guys, which was down here, okay? That equal low just meant that now there was more money being added into this pile, okay? More money being added into this pile. Now, since they've added so many new emojis, it's actually quite annoying because all I'm looking for is the dollar sign, okay? We've got more liquidity now beneath here, meaning we've had more people buying beneath here in this area. We've had more people placing their stop losses in this area. Retail traders are looking at this area as support, right? So I believe this area will be taken at some point. However, going back to what we saw here was price fell to make a new low. It then pushed up and made a new high, but it failed to break the previous high, right? So with price failing to break the previous high and still respecting our Fibonacci swing here, we had a nice reaction of the 88%, which was a nice 1, 2, 3, 4. That's the whole day. It took a whole day to kind of show us that solid rejection. And as the price started coming down lower, we can see here this was 11, but this big bearish candle was actually as the stock market officially opened in New York, and that's when we saw a continued push to the downside. So as we go into the 15-minute time frame, I want to show you guys my reasons for taking this trade. Now, we had this low here. We had a higher high, higher low, higher high, right, on the 15-minute, okay? When price closed beneath this low here, although on the line graph it shows you it made an equal low, when price done that, what I was interested with is what price was going to do next. Was price going to push up and fill some of the imbalance, or were we going to keep on extending lower? With this bearish candle, we extended lower. And in actual fact, guys, with this exact same candle was the confirmation for me to say, okay, we're pushing lower. And what I done was I waited for price to pull back up to fill the imbalance. And then we entered a short, and I set this out inside of the community. Now, this trade did come down. It didn't really give us any problems. We hit TP1, price pushed up. It took a bit of while before we then reached TP2. But we can see here that we had take profits 1 and 2 reached, which was over 700 pips, okay, 719 just for TP2. But we didn't quite get that third take profit area reached, which would have been over 1,000 pips, okay? I am now interested in a pullback. I believe from this Fibonacci swing, from this high to this low, we could of course get a new area, but the area to sell from, would be in and amongst this area up here. So essentially, because it was Friday, we closed the trade. There was no need for us to hold this trade over the weekend. Greed is always something that is going to blow our accounts. So of course we closed this trade and we took the profit off the table. Now, what's also interesting is how well the NASDAQ works with crypto. Now, what a lot of you may not be familiar with is the fact that when the crypto market is pumping, usually the NASDAQ is pumping with it too. So what I found here with Bitcoin was that actually we had areas to sell from up above. And when price pushed past this institutional level, I wanted price to pull back up in order for us to get that short. We didn't get the short, so we missed out on over, just under 1,000 pips here. But essentially, when price did come down and it came down to this eye level, once I saw price was not respecting this eye level and was pushing through it, with another pullback we had here with this bullish candle, we simply took this trade, filling the imbalance. And of course, this trade was alongside the NASDAQ trade too. So we kind of had an extra confirmation here, believing that because the NASDAQ was coming down, this would come down with it. And also with the NASDAQ, what I didn't share with you guys, which is something for a lot of my students, when they see this zonal box, you'll know exactly what this means. But we had reasons to sell out of this area too as well. Okay, this box gave us another reason for us to sell. And of course, when this moved, I currently wasn't on my charts. I wasn't on the computer at that point. So I was quite interested to see what would happen come the New York Open. The New York Stock Exchange Open, to be precise here, guys. The New York Stock Exchange is different to the New York Open. The New York Open is 1 p.m. UK time. The stock market open is 2:30 p.m. UK time, okay? So with that being said now, I was happy to wait for this move to pass. I was happy because all this move had meant is that price was respecting my initial setup, which was great. Now all I needed to find was a pullback. And if we could get one, of course, we would be in the game. So with that being said, I'm going to move away from these two pairs. If I just go back to Bitcoin, I can show you guys that Bitcoin came down over 4,393 pips. That was our 2 take profit areas that we caught with this. We left the third one open. We've been able to catch a whopping 4,300 pips with this trade. And of course, Bitcoin right now is still going because the markets don't rest on the weekends. Bitcoin does run 24/7. Now, what am I looking for with Bitcoin? Well, because we've got the halving coming up soon, I would like to see Bitcoin take out this low. I would like to see Bitcoin come back down towards 64,000, take out the low, and actually show us that Bitcoin is ready to come down. If Bitcoin could show us that it's ready to come down, I believe this would be just in time for the halving. I think what would make sense, okay, and this is just my advice, it's not financial advice, I'm not a financial advisor. Any information I give you guys, you should seek financial expert advice. But what I'm actually interested to see here is if the halving does take place, okay, or when the halving takes place, should I say, that price should come down first, so that once the halving takes place, price then rockets back up. To me, that's what makes logical sense. Whether we see that on the charts or not, that's to be continued. Okay. Now, I've also got some tricks up my sleeve here that I want to share with you guys. But what I'm going to share with you guys is really what I'm going to just touch on and go into a lot more depth, providing you guys inside of my community. So to get inside my community, make sure you go into the description box, you click on the Telegram link, you get access to my Telegram. It's open. Inside of my Telegram, you will see a username where you guys can message me directly, and of course where I can help you guys get involved in trading with me for the week to come. Okay. Now, I actually have a look at Goldman Sachs as well as having a look at JP Morgan, because when these two companies are performing poorly, the stock market comes down with it. Now, the S&P is the motherboard, meaning that if the S&P comes down, US 30, the Nasdaq, they will all follow it. So I look at JP Morgan and Goldman Sachs, even though they're listed on Wall Street, I look at these because what it does is it helps me understand what's the strength. Where is the strength right now? Are investors taking their money out, okay, or are they putting their money in? And in this instance, it showed us that investors were taking their money out, which was the reason why we were seeing prices pushing down lower. Now, the DXY has been on a phenomenal run. It's been pushing higher and higher and higher, and some may not understand why. Well, because we had the jobless claims, we also had, of course, Jerome Powell mentioned that he is continuously trying to curb inflation. The jobless claims really did push price up, as well as the inflation reports. The inflation reports came back and showed us that they are curbing inflation, which meant that this was going to be a positive sign for the dollar. Now, this is a high from last year, October. I believe that price could revisit this high before we decide to get a weaker dollar. And that could actually coincide with when we look at the majors here. Okay, we've had USD JPY surpass the 34-year high, which is phenomenal. Okay, because when we look at USD JPY on the monthly, all we can see right now is just price pushing higher to potentially at some point make a higher low to even continue making a new higher high. So we're not necessarily going to be bearish right now on the majors. But what we can do is we can, or should I say for USD JPY, but what we can do is try to understand where the dollar could turn around, because whenever the dollar could turn around, that could give us an indication as to where we could be getting into trades when it comes to trading the majors or trading USD JPY. So with the dollar on the monthly, we can see here we are currently inside of a candle. Price did fill the imbalance, and look, we've got 17 days left before the month surpasses. I don't believe that price is just going to sit where it is for the remaining 17 days. I think we are going to push higher, clear some of the liquidity. There's also some imbalance above, and if it does that, then of course we can revisit what the dollar should be doing at that moment in time. But before that, we're not going to get too presumptuous and start to predict that prices could go here or there, because right now we're in no man's land. Right now, I've shown you guys an article where it says that the central banks are buying gold. If the central banks are buying gold, you need to understand that's not the only thing they're buying. Okay, we've seen the dollar push up. Now, what's interesting, guys, is that if USD JPY goes up, gold should be coming down. Now, we've seen over this last week gold make a new all-time high again, and now the candle has closed where it looks like it could be forming a bearish reversal formation. Now, if the following candle opens in the week, it may push up slightly, but this formation would show us that gold should come down lower. Now, how low would I be expecting gold to come? Well, for starters, I definitely would be expecting gold to come down to around 22.39. That's just as a bare minimum, okay? I believe gold needs to pull back in order for it to continue its buying power, its buying strength, its buying momentum. So we're going to be having a look at this, but because we know the central banks are buying this asset, guys, the technical analysis is kind of out the window, okay? Because we're being told right now that the markets are being manipulated. How are we being told that? Because the market's going up. Now, if we look at this on the weekly shows us it's been bullish for the past 3 weeks, right? When we go into USD JPY, we see the exact same thing. It's been bullish for the past 3 weeks. Okay, so essentially the manipulation we're being showed is happening right in front of us. If USD JPY goes up, gold should be coming down. Okay, in other instances, When AUD USD is coming down, gold should also come down with it. Why? Because the Australian dollar has the largest gold mines in the world. So it means predominantly a lot of gold is transacted through Australian dollars. That doesn't mean that just because AUD USD is coming down, gold should as well. No, it doesn't mean that, okay? But it has a part to play. When we take into consideration USD JPY, AUD USD, these are both factors that should help support the weakness in this instance of gold coming down lower. The reason why we're not seeing that, of course, is because we've just seen an article which says, hey, the central banks, they're buying gold. Okay, so when we look at AUD USD right now, price is pushing down lower. Now, until we feel the imbalance here off of the daily time frame, is the only time I would be looking to revisit this. So hopefully, guys, touch wood, inshallah, next week I'm looking to get involved in some majors. I'd like to buy these, but it's only going to be based off of what the dollar decides to do. We've got GBP USD here. Also needs to come down a lot more too in order for us to buy. I would like for this imbalance in here to be filled. Without this imbalance being filled, then I really wouldn't look to buy this at all. So I'm waiting for that to happen. And of course with Euro USD, the same thing. We've got some imbalance below. So until these imbalances can be filled, that is the only time I'm going to consider looking at a reversal taking place here. Okay, if it doesn't, then I would literally like for price to come down, reach my institutional level or the 88%, wick it, and then push up, and then we would be buying to around the 107,500 handle. Okay, now I'm going to leave you guys with Euro AUD. This was a trade that I sent out earlier on in the week. I wanted price to actually play into this area, and it didn't. Okay, it came really close, guys, but not close enough, and that sometimes is the way the cookie crumbles. Off of the 8-hour time frame here, we had some imbalance in this candle which I wanted to react from, but in actual fact what happened was price filled some of the imbalance, left some of it, and then came down lower. Now, we didn't make a new low, so it's promising to believe that price could potentially push higher. So what we are going to do is revisit this sell limit that we've set. Next week, I'm going to look at this in the flesh. And whilst price is, of course, moving, we are going to revisit this, guys. So although this is the end of week review and a market Mondays, a late market Mondays, what I'm really doing for you guys is just trying to give you guys more in-depth understanding behind what's happening right now in the world, and of course why the markets are moving the way they are. I don't really think there's that much opportunities in the market right now. I really don't. When I look at USD Mexican peso, this is a pair that, as you guys know, if you've been following inside of my Telegram, we had some really clean moves with this, some really nice sells. We also caught some nice buys, and then price started coming lower. Now, it's interesting because price started coming lower, but since the dollar's had its insane amount of momentum, of course, we've seen that big push up to the upside. So we really want to see what happens now with the peso. We want to see if this is a recovery, if price continues to push up higher. If price does continue to push up higher, then I would be looking at these highs to be taking out because, for some time now, the dollar's just been going lower. But again, this pair is purely depending on what the DXY does. So we can't get carried away with just making our technical analysis. We need to keep into tune with what's happening with the dollar, and then we can plan accordingly. So last but not least, I'm going to show you guys the JPY basket, the Japanese yen. This gives us the strength of the Japanese yen. Guys, I have been waiting for the yen to gain some strength so it could push up into this area and then come lower. Unfortunately, the yen has just been continuously coming lower and lower and lower, consolidating and then pushing lower. So it's understandable why USD JPY also isn't coming down, because the strength for the yen is pretty non-existent. So that's going to be it for this week's wrap up. I want to, of course, formally apologize to you guys for not being there for the past couple of market Mondays, and that's simply because I was ill, guys, and of course it was Ramadan. I just wanted to focus and lock in. But now that I'm back, I want to tell you guys, if you're watching this video on YouTube, it really does help when you smash the like button. It improves the algorithms. But guys, if you're an experienced trader, if you're someone who's just starting, you don't know where to turn, all you need to do is just click the link in my bio. You can get access to my Telegram channel. You can have a look for yourself. Have a look before you make any formal decision. Have a look at the trades that I've been providing. Have a look at the results from some of the members. And then if you decide, guys, if you decide that what I've got is something that you want to be a part of, all you simply need to do is you just need to click on the private username where you guys can message me directly, or you can even book in a free one-to-one call. You can book in a free one-to-one call where I will help you guys. I will give you guys a free strategy which you guys can use for yourself. And of course, after that strategy, if you've learned it well, if you believe this is something that you want to be a part of, you guys can contact me. So with no further ado, I'm going to thank you guys. I'm going to love and leave you. And I'm going to tell you guys to always remember, every day is money day. Peace.